clean food platform, a restaurant segment, and other ventures, giving them a multi-pronged approach to growth. Now, let's talk about what's making headlines. WNW stock has been on a wild ride, surging over 66% in a single day and regaining compliance with Nasdaq's minimum bid price rule. This is a big deal for investors, as it removes the immediate risk of delisting and signals renewed market interest. Financially, Meiwu reported $10.97 million in revenue, with a revenue per share of $3.46. The price-to-book ratio is just 0.36, which could indicate the stock is undervalued compared to its assets. On the balance sheet, they have about $16 million in cash and cash equivalents, providing decent liquidity. However, the leverage ratio is 2.2, meaning they're carrying significant debt, and total liabilities stand at $11.5 million against $20.58 million in assets. This debt load is something investors need to watch closely. The company's strategic pivot into skincare, led by their subsidiary Chunchang Xiaomen, shows they're not afraid to chase new opportunities. The skincare market is known for resilience and high demand, so this move could pay off if executed well. But let's not ignore the risks. Meiwu has a history of extreme volatility and poor long-term performance, with negative returns over the last 90 days. Analysts have flagged WNW as a strong sell, cautioning about possible financial distress within the next 2 years. Last year, Meiwu posted a net loss of $16 million, and key efficiency ratios like return on assets and equity remain negative. While the company has insider ownership of about 37%, which can be a positive sign, the overall financial health is still shaky. Technical signals are mixed. There's a buy signal from the long-term moving average, but short-term indicators remain bearish. Volume is rising, which can suggest momentum, but be aware of recent sell signals from technical analysis tools like MACD. Now, let's talk about the future. Some price prediction models are extremely bullish, forecasting massive gains over the next decade, potentially thousands of % higher than today's price. But remember, these are speculative projections, not guarantees. The fundamentals still show a company in transition, with a lot to prove before it becomes a stable long-term play. So, is WNW a buy? Here's the bottom line. Meiwu Technology is a classic penny stock, high risk, high reward, and very volatile. If you're a momentum trader looking for a quick swing, there could be short-term upside, especially with the recent surge and sector pivot.